What the fuck? Well, let's see. Ah, you damn buggerhead. So real, so real, so real, so real, baby. Can you dig it? Can you dig it, baby? I can dig it, he can dig it, we can dig it, shake it. Oh, let's dig it. Come on and dig it, baby. Well, alrighty then. Oh, I missed that button. How did I miss that button? Unable to go live. Try again. Holy shnikey. Why does it say, good evening there, Michael? Now that's weird. So, let's see if I can figure this out. Hey, how you guys over there on YouTube, and you guys over here on Instagram, and you guys over here on Facebook? We have nobody on TikTok. Imagine that. Oh, here's an idea. I need my glasses for this one. Well, having an issue. Hey, Jacob. Everything's offline. It's not streaming.
Did you press start stream like you normally do?
Yes, I did.
We were streaming just a moment ago.
I
Go to
know we
restream.
were.
Go to restream.
I was just on restream. It's right there.
Hold on.
See, everything says offline. Offline, 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 offline.
Hold on.
Hold on. Hold on a minute. We're trying to get this thing figured out. And can't go live on PG and Starbucks, please. Yeah, Tony, hold on a second. We're having a little bit of issues.
I don't know what you're talking about. You're live right now.
So why is restream saying that it's not?
I don't know.
Well, this one's live. That one's totally separate. There's nothing to do with restream.
Hold on.
Hold on, Snoopy. Hold on, Sloopy. Wasn't it Sloopy? Sloopy. Hang on, Sloopy. Sloopy, hang on. Wait, okay. Johnson & Johnson after international acquisition, don't you think? We'll see. I see you talking to Jacob. Tony Fleming says hi.
Yeah, I have this one. I have no clue why. Dogs.
Just trying to figure out the restream. Who do we have over here?
Okay, the 10-minute trader is streaming. The 10-minute trader is streaming. Your TikTok error occurred and a TikTok error occurred. So you don't have TikTok. They are streaming.
So why are we able to stream on TikTok? I'm kind of curious. That's interesting.
Why aren't we able to?
I have no idea.
There was supposed to be a ban, and then there wasn't a ban.
Well, alrighty then.
So here's your chat box.
Okay, so
why it's not letting you? I couldn't.
No idea.
I can't answer that.
No idea. So let's make a quick video for people over on TikTok, and we'll shoot it up right now. So let's check this out. They're not allowing us to watch the lives. Why is that? I'm kind of curious on that one. Let's get rid of those. Now, let's go to post. And let's go here. I'm going to do a quick post for TikTok. That way we'll shoot it on up, see how many people are actually observing it. I got the one jam going on playing with one hand, thinking I'm on the mum. Going to make a mess. Yep. Supposedly they didn't restore live on TikTok. I guess I see that. Good evening, ladies and gentlemen. This is James from Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow. Now, I'm usually live on TikTok every night right about this time. For some strange reason, there is no live available. So we are going to be live on YouTube, Instagram, and Facebook. Also, Rumble, if you got that. So hopefully we'll see you there. This is James from Dividend Stock Talk, brought to you by the 10-Minute Trader. Because I'm looking for a simple, safe, predictable, consistent 1% per week. Hopefully, we'll see you guys on one of those channels. And good evening, ladies and gentlemen. This is James from Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow. Now, I'm usually live on TikTok every night right about this time. For some strange reason, there is no live available. So we are going to be live on YouTube, Instagram, and Facebook. Also, Rumble, if you get that. All righty. Just make a couple of hashtags there. People get to see them. Why not? I wonder if there are any other live shows tonight. Or they just no to everyone. Could be. And there it goes. All right, totally useless, but here we go. Well, not a whole heck of a lot of people here tonight, and considering tomorrow the market's not open, maybe things will change. I don't know. Well, we got a couple of people here. What we want to take a look at, let's get moving, and let's go from there. So let's go back to home. Unstable network connection. I wonder what that means, unstable network connection. Well, what are we going to look at? Well, the interaction is going to be a little bit different, so let's go to the top chat, see what kind of questions we have. Here we go. Good evening, good evening. TikTok went live today. Yeah, I saw that. Procter & Gamble and Starbucks. Procter & Gamble, Starbucks, and Johnson & Johnson. Alberto, ¿qué pasa, amigo? ¿Cómo está? Yes, I see that. Good connection here. Yep. Well, let's see what happens. All right, so let's go take a look at Procter & Gamble. Somebody want to take a look at Procter & Gamble? And for that, I gotta wear my glasses because the screen's way over there. Procter & Gamble. Here we go. Procter & Gamble. All right, so we have our high here, 180, and our bottom way down over here at 146. Look at that nice movement to the upside. Cool beans. But recently, look at this. Here's a high here, 180, and she drops all the way down to here. Why am I not seeing this? Here we go. Yeah, that's about right. That's what I'm wanting to see. According to Kramer, it might go down after reporting. Well, look at where it is. You got your high here. Okay, you got your bottom right here. We got 1, 2, 3, 4, 5. 5 days going to the upside for Procter and Gamble. So why wouldn't you say yeah to Procter and Gamble? The company's been around for over 100 years. Why the hell not? So let's take a gander. The last 30 days. Now the last 30 days we'd be looking at the 19th, which is right about there. Okay, here's the last 30 days. Look at the action there. Okay? 30 days ago, we're right there at 169. Drops a little bit, retraces, hits 170. Lennar, STZ. I have no idea what STZ is. You have to check with me on that one a little bit later. So from the high right here, from 170, she drops all the way down to 157.50. Well, that's a big drop, 157.50 from 170. And then she bounces back up again. Well, great. Well, let's look at the 160s. The 160 and the 161, because that's where it is right now. The 161 says 162.60 is the actual price at this moment in time. Right there, 162.60. The 162.50s are going for 167. Okay, that's over 1%, and that's what we're looking for. We're looking to get a simple, safe, predictable 1% every single week. Now, if I can manage that with the stocks that I have and companies that have been proven to be good companies, Procter & Gamble's been in business for over 100 years. How can you really go wrong with a 100-year-old company? And they consistently increase their dividends for more than 5 decades. Well, 5 decades is great because that gives consistency and profitability. Because if they're increasing every single year, well, they have to be profitable every single year. Good evening, James. Can we do Riot? Lynn, yeah, we'll take a Riot in a little bit. I can write that one down. We got a few to take a look at tonight. See, Procter & Gamble's first. Johnson & Johnson. Riot. Okay, Riot. What else do we have in the works here? I hate this glasses. It's about time I'm going to get bifocals. I really don't want to admit I'm getting older. Lennar. L-E-N. S-T-Z. What the heck is S-T-Z? Never heard of that one. I've heard of C-A-G. I'm not quite sure. Conagra. C-A-G. Bito. What are you kidding me? I guess it's Sloopy. Hang on, Sloopy, Sloopy, hang on. Sloopy comes from a very bad part of town. And everybody there tries to put my Sloopy down. Yeah, alright, anyway, let's get rolling. Alright, gotta put my... The weird thing is, like, when I'm going to read the questions, I gotta come close, get the glasses, but when I want to read the screen, I put the glasses on. We'll figure it out. I'll get up the kinks sooner or later. Alright. If your position rises close your strike price, is it better to close it out and start another on Tuesday or Thursday during the week? If your position rises close to the strike price. No, not at all. Steve, the idea. Okay, I ain't giving these damn freaking things. I hate fucking glasses. Ooh, sorry. The idea is, okay, simply put, you're either going to be looking for capital appreciation, which means stock just keeps on going up, or you're going to look for cash flow. If you're looking for capital appreciation, you're in the wrong place because I'm looking for cash flow only. Okay, I'm not looking for capital appreciation. If it comes, fine and dandy. If I buy the stock right here where it's at, 161, okay, well, right now the price is 162.62. James, please talk covered calls, but what about cash secured puts? Yeah, here on this channel, I only do one strategy. The reason being is like there are so many different trading strategies. It's just going to get complicated, and it's going to be a lot of questions and a lot of uneasiness, especially for me, only because I want to stick to one strategy. It's simple, it's safe, it's predictable, it's consistent. Yes, I do cash secured puts, but I don't do them here. Okay? I got to draw the line somewhere. Okay? I'm sharing all this stuff for free. I got to draw the line somewhere. But I do like cash secured puts, but we're not going to talk about them here. All right. Anyway, if I'm going to buy the stock at the current price, 162, and sell somebody the rights to buy it from me for the same price I just paid for it. Well, if the stock goes up, I'm already collecting the premium. And the premium is already 1% of what it is I'm looking to get. Okay, so if I put in $100,000, I want to get $1,000 back. That's 1%. If I put in $200,000, I'm going to want to get $200,000 back. I live, sells, and puts, makes money without owning anything. Yeah, Alberto, I get that. It's a wonderful strategy. It really is. But I got to make a choice. Which strategy am I going to teach here? Okay? Covered calls is the simplest, safest, and easiest to get into and out of. And if you do it right, you can get up to 50% per year or more. All right, so that kind of makes sense to me. All right, so this is what I'm looking at. If the stock goes up above the strike price I sold, I will have all my cash all back to me. Okay? The idea, buy the stock. See, as it's dropping to here, here's the bottom. What usually happens when it hits the bottom, it usually goes back up again. Well, you have between here, the current price, and the 30-day high, which is up here. Look at all that space it has that it can move. So yeah, why not do it? Now, if I want to buy back the option and try to take advantage of the capital appreciation, it's a defeating purpose. Because once you sell the option, okay, the option value increases as the stock price increases. So they're not two separate entities. As the stock price goes up, so doesn't the price of the option. So it really makes no sense to, as the stock goes up, to buy back the option and then try to sell the stock. It doesn't really work that way. They go hand in hand. As the stock goes up, so does the value of the option. It doesn't really. So what I'm doing is what I'm trying to say, a covered call. I buy it at the current price. I sell it a covered call at the current price, and I collect the premium. And the premium is usually over 1%. That's my 1% per week. Safe, predictable, consistent, and it's something I don't need to worry about. Because number one, if I like the company, why not? First question is, do I like this company? Well, actually, first question is, does it make sense? That's the first question. Number two is, do I like this company? And number three is, do I like this company at this current price? Do you ever buy leaps versus stocks? John, yes, I do. But again, I'm not talking about those here. Okay, I'm only talking about one strategy only. Covered call. That's when you buy the stock, a dividend stock, just before the dividend date, sell a covered call at the money as the market opens first thing on Monday or Tuesday in this case, because we're not open tomorrow, and then you just collect that premium. And as the premium increases every single wait. As the premium, okay, wait a second. As the stock price increases, so does the premium. So it makes sense to just collect the premium, say thank you very much. I'll see you again in 90 days when you're ready to pay the dividend again. Because just before the dividend, the stock has a tendency to go up. So if the stock has a tendency to go up, great. Buy it at the current price, sell it at the current price. You're right. It's easier. Yeah, thank you. So I like Procter & Gamble. Next on the list, let's go to the next one. Next one would be Johnson & Johnson. Sweet Jones, how are you doing today? Yeah, for some strange reason, they haven't did the live yet on TikTok, so we're doing YouTube, Instagram, Facebook, and Rumble. So let's see how they all work. All right, next on the list. Do you do trading options? Cloud band, yes I do. That's why we're here. Simple, safe, predictable, consistent, 1% per week, and we're doing stock options. Specifically covered calls with stock options. All right. Johnson & Johnson, that's what we're doing. This getting old stuff is for the birds. I think I might be rethinking this two-screen thing. If I got to put the glasses on every time I do this. All right, so here we are, Johnson & Johnson. Here's the high of the year, 168.91. All right here. Here's the bottom right here, right around 140. Okay, she goes up, pulls back, goes up, pulls back, and now she's bouncing off this, going back up again. I want to see this area here because this is right where we are right about now. Does it make sense? Well, Johnson & Johnson is a 100-year-old company. Well, it's over 100 years old. It's been around for a while, okay? I don't think it's going anywhere. Current price, 148.31. So the 148s are going for 140 to 150. The 149s are going for 103 to 111. Not quite 1% here. But the 148s, you're getting your 1%, but then you're losing 30 cents. So you're not getting the full 1% on Johnson & Johnson. But then again, Johnson & Johnson is such a big company, they don't really need to give you that big fat premium. They don't. So very rarely do I ever buy Johnson & Johnson just because of that. Because they have no problem whatsoever giving you 0.75%. Now, 0.75% is like 40% per year if you do it every single week. Like Johnson & Johnson, how could you not? You know, it's a dividend king, which means they've consistently increased their dividend payments to their shareholders for at least 5 decades. So why wouldn't you jump in and buy it? It just makes sense. All right. Next. Riot. I like Riot. Ooh, we're going to take a look at Riley also. Okay, Riot. Let's do this. R-I-O-T. All right, look at that. All right, what are we looking at? All right, here's our high. Here's our low. Here's where it was. Here's where it is. Look at the movement. Up, down, up, down, up, down, up. Okay, so is she going up or is she pulling back from there? It's kind of hard to tell looking at the 1-year chart. We'll take a close look at it in a minute, but what I mainly want to see is I don't want to see it way up at the high of the year. Because the high of the year is at 18. Well, right now we're down in this area at 13. Not bad. The low of the year, way down here. Okay, so we're somewhere in the middle. Fine. Great. Let's take a look at the numbers and see what the numbers say. Well, currently 13.42. Well, the 13.50 is going for 71 cents a share. Well, that's freaking nice. But look at the 13s. It's an even safer bet. 13 is a safer bet, but 13.50 is going to be more profitable. So we're going to take a look at both of them. Okay, we'll take a look at the 13. And then we're going to take a look at the 13.50. And we'll go from there. All right? So that being said, let's take a closer look at the chart. All right. All right. That's pretty much okay, isn't it? Right there. Lovely. Love it. All right. Now I can see it better. All right. So a year ago, we're at $9.95. We topped out at $18.36. That was back in end of February last year. Look at the bottom right down here in September, $6.41. Well, from there, she shoots up nicely to this trading range. What is that, between 11 and 13, right in there? Okay, fine. 90-day high is 15.79. Let's go to the last 30 days. That would be what, today's date? Okay, yeah, I should have figured that one out. Today's date. Here we go, right there. Here's the last 30 days. Unfortunately, look at where it is. 30 days ago, we opened up at 12.69. Drops here, shoots up, pulls back, and look at the shoot up right here. Now, the 30-day high was last Friday. So more than likely, there's going to be more profit taking because your bottom's here at 10. Okay. Now, it doesn't sound, look at the numbers and think to yourself, because it doesn't look that much, because it was at 10.04. Where's the bottom? Right there. 9.99 is the bottom. Okay. So $10, it jumps all the way up to 14.43. So that's $4.43 move. Now, $4.43 is not a lot, but on a $10 stock, it's 40%. That's a 40% increase in 2.5 weeks. Well, ask yourself the question. If you had a position that went up 40% in 2 weeks, would you take it? I know I would. All right, but anyway, let's keep on going. So at this moment in time, this is just my assumption. It's not guaranteed. My assumption from here to here, 40% increase. You can argue all you want about the numbers, but it is what it is. The low, $9.99. The high, $14.40. That's a $4.40 increase. That's over 40%. There's going to be profit taken. This thing is going to come down. So getting into it, no. Now I already own some, so it's a different story. Now the positions that I have no problem holding on to them and rolling them forward into the next week, so I can always collect that 1% that I'm looking for. Okay, so as a matter of fact, let's see what would happen if I was going to roll one of those positions. Riot right there. Okay, right now I'm into it 11.14 and I sold the 10.50s. Okay, so basically I'm in the money. All I'm waiting for is the clock to tick away and just put me back into cash. But let me show you how you roll it forward. Basically, now I'm going to make the assumption you're using Thinkorswim because it's not the easiest trading platform to use, but everything you need is right at your fingertips, right there on the one screen. I can see the chart, I can see the stock prices, I can see the positions. Now, don't get me wrong. I wrote a book 15 years ago on choosing the right trading platform. They weren't as easy as this one. All right. Okay. Now, if and when you do download your Thinkorswim, all right, Thinkorswim is one of those few trading floor platforms that allows you everything right there. Watch, it's simple. You take your cursor, right? You take your cursor right over the position, Riot, click on it, right click, window drops down, and it says right here, create a rolling order. Here we go. Click on that. Boom. There it is. See it? That red line right there? Can't read it without the glasses. I can't read the comments with the glasses, and I can't read the charts without the glasses. Fucking getting old sucks. All right, so here we go. Let's get rid of this because we don't need it. So here's the trade right here. So I'm going to buy back the 24s, and I'm going to sell the 31s, which means 24 February, which is next Friday, and 31 January, which is 2 Fridays out. So for that, it's going to cost me 18 cents a share. I ain't doing that. Sorry. But that's how you roll it forward. Now, when you roll it forward, you can always change this. I can change it to March if I wanted to. And it's not traded in March. 21 February, not traded in February. The 14th of February, there it is. It's traded in the 14th of February. So you can change the dates, the expiration dates. You can change the strike prices. You can change a lot of stuff here. But it always comes back to the same thing. You're buying back the near option, which is this one here. Okay, the lower one, which is the buy. You're buying 7, and then you're selling the next ones. So it's always the same. You're buying back the one you sold, and then you're selling the one that you want to do. And hopefully you're getting a credit. See, I don't like... Now, don't get me wrong. Every once in a while, you might have to pay a debit. Okay, how are you doing? All right, so I'm not going to do this, but that's how you do it. Let's go back over to here, right there, and there you go. So let's go on to the next stock. Now, I do like this one, Riot, because I do have some in several different accounts. So it is what it is. Let's keep on moving. All right. Next on the list, Lennar, L-E-N. Look at this. We got 32 people over here now. Wow. Okay. So Lennar. Let's put in Lennar. L-E-N. L-E-N. Lennar. Nice. Look at that. Now, you may look at it quickly and say, what is he saying nice? Well, what I'm saying nice about it is right down here. Okay. Here's your high of the year. Here's your low of the year. Now it's bouncing off the low of the year. You make most of your money buying stocks at the low of the year. Well, the low of the year was just last week. Well, that's a great time to buy it. Look what the high is, 195. Well, we're right here at 140. So we got a long way to go before we challenge that high again. True, USD, thank you very much. All right, so that being said, let's take a closer look. What do the numbers look like? If I'm buying Lennar tomorrow, am I going to make a profit? If so, what does it look like? Well, 141.54 was the last traded price. Right there. Okay, so if I do the 142, holy cow. I've never seen that before. Seriously, I shit you not, I've been trading for 20 years. I've never seen this. Look, I'm going to read to you the strike prices and see if it makes sense to you. Because it doesn't make sense to me. 122, that makes sense. 123, that makes sense. Then it jumps to 126. Well, that's weird. Then it jumps to 127. Okay. Then it jumps to 140. It goes from 122, 23, 26, 27, 49, 157, 175, 185. What the hell happened to all the numbers in between? I've never seen that before. It's usually 122, 123, 124, 125, and it's usually $1 increments until you get to a certain price. But then it's $2.50 increments. And then from there it's $5 increments and then $10 increments. Why are the strike prices like that? Less liquidity. Robinhood doesn't offer options on Lennar. Oh, well, sorry about that on Lennar thing. Why is this? No, I just said, did you not hear me just say, I've never seen this before? I've been trading for 20 years. Never seen this. This is crazy. 122, 23, 26, 27, 49, 157 and a half, 175, 185. What the hell is that? All right, let's do this. Let's look at all of them. Now that doesn't make sense either. All right, 70, 75, 80, 85, 90. Now, here we go. 121, 2, 3, 4, 5, 6, 7. Yeah, it's doing the exact same thing. Even when I look at all of them, it's going from 127 to 149 to 157 and a half. Now this one makes more sense. Okay. 139, 140, 141, 142, 143, so on and so forth. This one makes more sense. That other screen made no sense whatsoever. All right. Is what it is. Let's keep on moving. All right. So, a year ago, we're at 152. The high of the year is 194.22. Now, that was back in September. From there, look at the last 90 days. 30 days, 30 days, 30 days. Right there. Yeah, not the time to buy Lennar. Now, it looked good a few minutes ago, okay, when we're looking at the 90-day chart. But look at it now. Definitely out of price because your 30-day bottom's here, 128. Your 30-day high was Friday. So Monday was the bottom. Friday was the top. Yeah, not a good time to jump in now. Seasonality even has this thing going at, what are we looking at? Yeah, well, we're here. Looks like she should be continuing to go up. Hypothetically speaking, of course. But that's, that's not guaranteed. It's just like it normally goes up this time of year. All right, fine. Well, it's Lennar. See what happens. Say hi to a couple more people over here on Instagram. Karokam, how are you today? And Wakolda. All right. That all being said, let's get out of here. All right, so back to Lennar, the 142s right here. The numbers aren't even available. How the hell can they do that? I'm a fan from TikTok. Cool beans. Well, I'm kind of curious. It took me a year to get to where I am with TikTok, and now all of a sudden it's just gone. Well, most of it's gone. You can post stuff, but the lives aren't available yet. So we'll see what happens. All right. Maybe they don't want us talking to each other. We can send each other videos, but we can't talk to each other live. I looked up Lennar on Fidelity, and all the strike prices are showing. So yeah, it could be a problem with Thinkorswim. Could be. Anyway, let's keep on moving. Next on the list is going to be SPZ. Now, I don't know why someone looked at SPZ. I've never even heard of it before. But let's take a look. SPZ. Smart packages. No options. That's terribly sorry. That's going to be a no. CAG. Is that Conagra? CAG. Wait a minute. Isn't CON Conagra? What's CAG? Conagra. I was right. All right. So, Conagra. Ouch. Ooh, what's happening here? All right. We'll take a good look at that one. Hold on. Okay. So, we got our high here, 33.31. That was back in September. Our bottom was Thursday. All right. A year ago, we're at 28. Okay. Now we're at 25.80. 25.80. All right. What do the numbers look like? The 26s are going for 15 to 25. Now, you got to remember one thing. Next week or this week coming up, there's only four trading days because there's no trading on Monday. So things might be a little bit different. Don't know. But if you like Conagra, well, let's take a gander. A year ago, 28. Topped out in second week of September at 33. Well, from there, she gaps down, goes sideways a bit, down again. Here we are. Here's the bottom on the 19th, right there. Here we go. So 30 days ago, we opened up at 26.95. Shoots up to find the high at 28.10. Right here, 28.10. Then she drops. Thursday is the bottom. Thursday was an up day. Friday was an up. That's two up days right there. Now, the next day, which would be Tuesday, just barely getting, because if you're doing the 26, you might get your 1%. Might. Because it's going from 15 to 25. And the stock price is 25.82. So you might get it, you might not. But you got to ask yourself the question, do you like Conagra? Well, Conagra, CAG, how long have they been around? How consistently profitable are they? STZ looks like to be a daily bear flag. I don't know what the heck STZ is. Okay, here's STZ. Constellation. Never heard of them. Imagine that. All right. So, Constellation, a year ago, 253. Tops out at 274. That was in mid-April of last year. Your last 90 days. Look at that move. 90 days ago, 258. Here's the bottom right there. And on the 13th. That was last week, wasn't it? All right. Last 30 days. 30 days ago was the 30-day high, 231.86. Gap down on last Friday. Not last Friday, but the Friday before, on the 10th. Big drop. Gaps down and then keeps on dropping. Okay, we did close at 219, okay, on the 8th. And then on the 10th, because there was no trading on the 9th, okay, on the 10th, we opened up at 203, which means she opened up down. Okay, from here, she opened down, and then she kept on dropping. Okay, well, look at where we are now. We got 1, 2, 3, 4, 4 days to the upside, because here's your bottom here. Okay, your bottom's here on the 13th at 176.51. Well, we're at 184 now. So you have to ask yourself, from here to here, it is definitely going to the upside. And you have a gap. Gap downs on something like this, they do have a tendency to fill. So normally, this thing is going to slowly go back up and fill this gap. How long is that going to take? Well, that's going to be anyone's guess. But it always comes down to the one question. Do you like this company? If so, do you like it at this current price? Well, it's 185 at the moment. And if you buy it at 185, well, you could sell it at 185 or the 187.50s. Okay, you get your 1%, and isn't that what we're looking for? Yeah, Anthony, I looked at that. Riot and Riley. You know what? I haven't looked at Riley yet. We looked at Riot. It's the GAFA. We together, the GAFA. All right, so Riley, we haven't looked at that one yet. All right. Riley, a year ago, was at $20. Shoots up to 40. That's 100% increase. So from January last year, a year ago today, $20.62. Okay. By the time the end of March, you got 100% increase. Well, that's not bad. That's 100% increase in, what was that, 4 months, 3.5 months? But from there, didn't take long to get to this point right here. The 9th of August, at 17. So it went from 20 to 17 on the 9th of August. A couple of days later, we're down here below 6 and keep dropping. Wow. Look at that. Just keeps dropping and dropping. So we have our bottom here. Where's the 19th? Right there. Here's our last 30 days. 30 days ago, we opened up at 497. Very next day, there's our 30-day high, 530, way up here. And she drops. Comes down. Here's our bottom. That was last Monday. Now, last Monday's bottom is at 394. Okay. Now, but look at the last couple of days. Okay. Tuesday, higher. Wednesday, higher. Thursday, higher. Friday, higher. And we ended up on Friday, closed at $5 even. Well, I'm pretty sure I sold some 5s. Let me see what they look like. That's going to be interesting. Riley. Yeah, the 5 puts. I pushed them off until next week. Okay, that's fine. What does the other one look like? $5.50s. Okay, sold the 5s. All right. That's what that looks like. All right, so let's keep on moving forward. So now, like I did say, I do own some Riley in like 3 or 4 different accounts, but, does it make sense to jump into it now? That's a call you're going to have to make on your own. Because remember, a while ago, this thing was at $40. Now it's at $5. I don't know, that don't sound too good, but it's okay for me because I'm jumping and I'm out. I'm in and then I'm out within a couple of days. I'm not holding on to it forever. And by the way, you're going to make most of your money in the stock market when you buy low and sell high. Well, this thing is at the low of the year 4 days ago. That's the low of the year. I think that's the low of the year, isn't it? Yeah, that is the low of the year. All right, so next on our list, somebody wanted to take a look at BITO. Why are we looking at BITO? Now, I know if you look at my trade history, I did trade BITO last year because the numbers just look good. And then she just disappeared on me. See, last year I bought BITO at 32. Okay, and then she just sunk. And then she went back up again. Not even coming close to the 32. So I'm kind of glad I got rid of it. Now, I did a trading strategy on it, and I did make money from it. But from there, it just went bye-bye. Because it just wasn't performing the way I wanted it to. Too many gaps. Okay, look. Gap here, gap here, gap here, gap here, gap here, gap here, gap here. Here, here, here. Yeah, just a little too much for me. No predictability and no steadiness to it whatsoever. Big Red Jr., what's happening? Big Red. All right, anyway, let's keep on moving forward. So that's Bitto. I don't normally do it, and it's not been around long enough for me to actually like it. But I did do it once last year, and I'll never do it again because it has no historical performance, and there's just too many gaps. There's no consistency to it whatsoever. Big Red, you want to be on the live. Now, Big Red, I usually have no problem going live with someone and sharing the spotlight. However, I do insist, before I do invite you live, is for you to send me a phone number, me to call you, us to have a conversation. If we're talking the same language, great, more than happy to have you on. But I have no idea what you want to talk about, Don't want to talk about Amway. Don't want to talk about crypto. I don't want to talk politics. Definitely don't want to talk religion. I want to talk strictly dividend investing for weekly cash flow. So, you really want to co-host? Great. Send me your number. I'll give you a call. That being said, let's move forward. Next one on the list is going to be Ford, because I like Ford. Now, I don't have the interaction like I usually have, so I'm just going to go off my list of stocks that I have saved up from last week. All right, so Ford, here we go. Here's our high, here's our low, here's where it was, here's where it is. Okay, 10.18. So right now, 10.18. The 1050s are going for 5 cents. Not really worth it. Look at your last 30 days. Okay? The last 30 days tells me a lot. Well, here, 30 days ago, we're at 975. Shoots up, pulls back, shoots up, pulls back. Look at this. Gaps up and keeps on going, making a new 30-day high. Do I want to jump into Ford at a 30-day high? No, I don't. Sorry, I changed my office around a little bit, added some more equipment in, so I can actually talk on the microphone. But my table's not here where I usually keep my tea. All right. That being said, Ford is going to be a no this week only because she's at the high at the moment. I don't like buying at the high, 30-day high. Next on the list, Coca-Cola. Why not? Coca-Cola. All right. Here's our high right here with Coca-Cola, 73.60. Our low was back in April. So she goes from the low in April, shoots up, back down again. So it's at 58 to 74. Now that looks like a lot, 58 to 74. It's only 16 points. 16 points on a $50 stock. Diva, how are you today? It's only $16 from 58 to 72. It's not that much on a $50 stock. How much is 15? Well, 15's, 15%, 18%, something like that? Wait a minute, 15? No, 20%. That's a 20% move from here to here. You would think it's more. Look at this. Look at that. On the chart, it looks huge. But no, it's not. It's only 20%. It's only a 20% move. That's it. Okay, and then she drops. Here we are right now. This is what I want to look at right there. All right. But before we do, let's take a look at the premiums and see what those are. So right now I can buy it at 62.78. So the 63s are going for 25 to 40. That's only a 0.5%. Coca-Cola, there's a few companies you're going to find almost the exact same. Bibzig, what's happening? So a couple of companies you're going to see that have the premiums like this. Coca-Cola's one. Pepsi, once in a while, you'll get a good premium. Johnson & Johnson, that's another one. A couple of the companies that are like over 130, 140 years old, they don't really need our business, so they're really not going to give us that much of a good premium. But some of the other companies will. Good evening, James from TikTok. David, how are you? George, how do you buy a dividend stock at a say $10, then turn around and sell it for $10 and still make a 1% profit? Scratching my head. George, you're new. And welcome to the show, George. Let me show you. It's really not that difficult. Let's find ourselves a $10 stock for Mr. George. Macy's. Macy's might be a good one. Macy's is usually pretty good. But Macy's, oh, wait. Macy's is at $13.99. Hold on. What about Walgreens? WBA. 12. I don't know. 12 for Walgreens or 13, 14 for Macy's. Still pretty much close. So I'm hoping this one will work for you, George. Okay? Walgreens. No, I don't do Walgreens. What does Macy's look like? Yeah, Macy's is better. Okay, I'm going to show you on Macy's. It's a $14 stock. We're going to get our 1%. Maybe more. Hold on. First and foremost, Macy's. Do you know who the company is? Number one. Doesn't make sense. Okay, the high, 22. The bottom, right down here, around 12. She shoots up, comes down, goes sideways, shoots down, goes sideways, up, down. What's happening right here? This is where we are right now. So let's take a look at that and see if we can show George how to get 1% on a $13.99 stock, $14. Okay, because the current price right now is $14.01. Now, if I sold the 14s, I'd pick up 26 cents. Let me show you how, if I buy it at $14.01, because look at the current price right here. The current price, $14.01. Okay. Last, bid, ask, open, high, low, volume. All the information you want on the stock is right up at the top line. That's the information on the stock. So this one here, Macy's, $13.99. Let's take a gander at it. A year ago, Macy's is somewhere around 17. Shoots up for the high of the year, 22. And look at the last 90 days. Now, I'm looking for 5 things every time I look at any chart. 1-year chart, 90-day chart, 30-day chart, all looking for the same thing. The high, the low, where was it, where is it, and what's the direction? 5. Okay? Down, up, down, up, down. Now she's going back up again. All right. I'm going to take a closer look here because that was Wednesday, Thursday, Friday, this little area here. All right. Last 30 days. All right. 30 days ago today, $16. Shoots up to a little over 18. Drops here. Here's our new 30-day bottom on Wednesday. Okay, team wants to take a look at Key Bank. K-E-Y, Key Bank. Yahoo. All right, so that being said, here's our 30-day high. Here's our 30-day low. Okay, wait a minute. Wait. You guys can't see that very good. I'm going to have to push this back some. Is that better? All right. Had to push my desk back. All right. Here's the high. Here's the low. Okay, now we got 2 days to the upside right here. All right, so I like Macy's. Last year it was one of my best performing stocks. Now I'm going to show George how to get a safe, simple, predictable, consistent 1% per week off of a $14 stock. Okay, I'm going to look for another $10 stock, George, just to show you, but let's look at this one. It's only $14. Now, I like it right where it is at 14. So what I'm going to do, I'm going to get rid of this. I'm going to change this to where it says covered stock. Okay, see that? Covered stock. And I like the 14s right here. The 14s. I'm going to buy it there. Here's the trade right here. Now I'm going to change it from 10 contracts. See right there where it says 10? I'm going to change it to just 1. That way you get a better idea. Okay, 10 might be confusing, but 1, everyone can figure out from 1. There we go. Now I'm going to change it from a limit order, okay, to a market order because I want it to get filled instantaneously. All right, so market order, there we go. George has got another question. Hold on, George. What are some sample stock dividends as a first timer you would suggest? All right, George, we're looking at Macy's at the moment, okay? Now, Macy's is one of my favorites. If you take a look, I'm going to show you in a second. Wait, you know what? Let's take a break and show this to George right now because George is new. George doesn't know. So we're going to go back to here for a second, George. Whoops. I'm going to go to here, to there. Now, on here, you're going to see all my past trades. Well, first off, there's all my social media, YouTube, Twitter, Facebook, Instagram, TikTok, podcast, LinkedIn, Patreon, and of course, books by James, because I did write 14 of them. All right, so you slide down a little bit lower. Here's all of my trades for last year. See, week number 52. Yeah, I got to finish that one. All the way down at the bottom. Okay, scroll all the way down. Look, it's halfway down. Week 33, week 32, week 31. There's 52 weeks in the year. I share all my trades. Go all the way back. Anyway, I hit week 18. Just click on it. And it tells you what I bought. Marathon, Macy's, Paramount, Intel, New York City Credit Bank, Paramount. You already did that one. Okay, also what's on there is the rates of return for the week. Look at this one. 2.9%, 2.5, 1.3, 2.55. So anyway, George, as you can see, I've been doing this for a while. Every single one of my trades last year is posted online. Easy to see. Just click on it and tells you exactly what it was. And it also tells you what rate of return I made that week. Okay, what the profit was that week, blah, 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 all that kind of nice, neat, fun stuff. So let's go back to where we were right here. Okay, so currently we're looking at Macy's. Okay, so I'm going to buy I'm going to do one covered call. Here we go. And here's what it sounds like. Are you ready? Buy one covered call of Macy's 100. That is the weekly. It says right there, weekly. 24 January 25. Well, that is this coming Friday, the 24th of January. This Friday. The $14 call strike against Macy's, the stock, at the market to open. Next line, right here. 1370. Well, that's the break even. Well, what does that mean? If the stock ends next Friday, well, this coming Friday, above $13.70, it will be a profit. Well, right now it's at $13.99. See it? $13.99 is right there. That's the current price. So even if the stock comes down a little bit, I'm still in a profit as long as it's above $13.70. So stock goes three ways. If it goes up, great, I make all my money. If it stays the exact same, great, I make all my money. If she comes down, well, she comes down all the way down to $13.70, and that's break even. Well, alrighty then. All right, so let's keep on going. Maximum profit. Okay, now, remember when I said simple, safe, predictable? Predictable. That means I know what I'm getting before I even do it. Well, this one right here is $30. For one contract, it's $30. Fine. What does that mean? Okay, one contract, my maximum profit's $30 per contract. If you can buy more than one contract, great, you make more. So what is it going to cost? Well, you have to buy 100 shares of stock in order to sell one contract. So let's bring up the calculator. Okay, clear that out of there. Now, maximum profit, $30. Put $30 in there, $30. And I'm going to divide it by the cost of the trade, including the commissions and fees. Well, that's $1,370. $1,370. And if you're really picky, 66 cents. Okay, so lo and behold, do you see that number right there? 2.18%. That's what it's going to be. 2.18% for 1 week. Now ask yourself a question. Does that make sense? Well, number one, do I like Macy's? Number two, do I like Macy's at this current price? 3, do I want to hold on to Macy's until it hits my target? Well, what's my target? Well, my target's $14. Well, right now it's at $13.99. Okay? I do one contract. It cost me $1,300. Well, $1,370.66 for 100 shares of Macy's. I sell one covered call for someone to buy it from me for almost the exact same price. You can't get almost exact same $13.99 and selling it at $14. That's almost the exact same. That's pretty damn close. All right, so if I buy it currently $13.99, sell it at $14. Anytime between when they pay me for it, which most likely will be Tuesday morning, and the time the option expires, because the option expires Friday afternoon. FEX. What the heck is FEX? I'll take a look at it, but I've never heard of it. Now I heard of FedEx, but I never heard of FDX. No, I mean FEX. All right. So if that makes sense, George, wait till you see this. Now, the numbers that I'm showing you right here says cost of trade including commission and fees, $1,370. But if you're on a margin account, now I always suggest people don't get a margin account until you understand what the risks are. You know what? I should record some of these so that I can upload them because it's being an issue. All right, this might be fun. All right. Let's do this. All right, so we're looking at Macy's at the moment, and if I do a covered call on Macy's, the current price is $13.99. Okay, fine. At $13.99, the closest strike price is going to be the $14. If I sell somebody the right to buy it from me at $14, after I just bought it for $13.99, I can collect $30 per contract. Now, one contract is going to cost me $1,370.66 in cash. But what if I do it on margin? Well, get up your calculator. It's the same thing, $30, and that's the profit. On the one contract, it's a $30 profit. Now, if I do it on margin, depending on what type of margin you have. Now, some people have a 1-to-1 margin. Some people have a 2-to-1 margin. I've even heard of people having a 5-to-1 margin. Now, you got to be pretty damn rich to get a 5-to-1 margin. And you have to have a lot of experience doing it. Okay, so now I've been doing this for 20 years. I'm on a 3-to-1 margin, which means one of my dollars to 3 of their dollars. But we're going to take a look at this one. This one is just a 2-to-1 margin, which means one of my dollars, one of their dollars. Okay, so I'm actually borrowing money to do this trade. Not something I suggest, but I want you to at least understand what's possible. The better you get at it. Now, don't do this unless you really understand the risks involved. So, margin account, it's 2-point-something%. Right? 2.18, right? 2.18% on cash. What does it look like on margin? All right. Same thing. $30, but right here, look at this. Buying power effect. Because this is a margin account, it's only costing me my own money, $671. So, divided by 671, and for those of you who really want to know the details, 15 cents. 15 cents. And that comes a grand total of 4.46%. Now, George, you're asking me how do you get 1% on a $10 stock? Well, if I buy Macy's at $13.99, sell somebody the right to buy it from me for basically the exact same price I just paid for it, in this instance, $14. So we're looking at the $14 call strike. Okay, giving somebody the permission, the right, not the obligation, the right. So if they want to, Monday afternoon, they can say, or Tuesday afternoon, they say, hey, I want to buy this stock at $14. Well, fine, let them buy it. What I'm looking for. I'm not looking for the stock price to go up in value. No, I'm looking for it to stay the same. Okay, or go up, or even go down. You know, it's weird, but I really don't care where the stock goes because my concern. My major concern, number one, consistent profitability. Is the company consistently profitable? Well, how often have they increased their dividends? How long have they been in business? What is their book value? What is the absolute worst case scenario? Well, Macy's consistently pays a dividend, and they have been paying a dividend for a hell of a long time, which means they're sharing their profits with people like me, the investors. So once you buy stock, once you sell stock, you become an investor. You become part owner of the company. Thus, with a dividend stock, you're entitled to a portion of the profits. The other hand, if a company doesn't pay dividends, you're not entitled to the profits. You only get the appreciation as the stock price goes up. That's all you get. Okay? And a dividend once in a while if they have dividends. Wait a minute. No. Scratch that. Let's keep on moving forward. So, next. So, George, I hope you understood that. Okay? That being said, I'm going to pop that one up for... And I can't send that one off. Damn it. That one doesn't work. Apparently that phone is congested with too much information. Anyway, it is what it is. So let's take a look at something else. So we looked at Ford. We looked at Coke. Pfizer. Pfizer is going to be next. Let's take a look at Pfizer. PFE. PFE. First, we got to get out of this. Got to get out of that. Got to get out of this. Got to change this back to that. And then we got to go back to this. And then we're going to put Pfizer. PFE. And there you have it. Take a quick gander at Pfizer if you would. Here's the high at 31. Here's the low at 24.50. Where was it a year ago? Well, a year ago we're at 28. So it goes from 28 down to 25, up to 31, back down to 24.5. Now we're somewhere around 26. Okay, fine. What do the numbers look like? If I buy this thing on Tuesday, first thing Tuesday morning, what am I looking at? 26.37. Okay, 26.37. So the closest strike price to this is going to be the 26 or the 26.50. Now, if I do the 26, I'm losing 37 cents. You take 37 cents off of this, then you're walking away with 4 cents. Not worth it. For 0.5%, if you're okay with that. I'm going to say no. For me. Now, 4 weekdays, a week full of only 4 days, sometimes it's tough to get 1%. But not always. But Pfizer, no. What if we did next week's? Next week's 26.50s aren't going any better. How could they possibly give you a 2 week? No. Sorry. That doesn't work either. All right. Next on the list. Kroger. Ooh, I like me some Kroger. Pfizer pays. Yep, I saw that one. Next on the list, we have Kroger, KR. All right, here's Kroger. The high of the year, the low of the year, where it was, where it is. Look at the movement. Up, down, up, down. Doesn't really look that promising right here. Let's zoom into the last couple of weeks to see if it actually looks halfway decent. Well, here's our last 30 days. 30 days ago, we're at $60. Shoots on up to 63. That's our high of the 30-day period. Our low of the 30-day period is down here, Thursday and Friday. Well, what happens when you hit a 30-day bottom? 30-day high, 30-day bottom, usually turns around and goes back up again. Now, for me, I like 2 days to the upside. Well, the bottom's here, right around the 58 area. Well, let's take a closer look. Thursday, 58.12. Friday, 58.12. We got a double bottom right there, Thursday and Friday. So I'm looking for 2 days to the upside. So the earliest I'd be able to jump into this thing would most likely be Thursday or Friday. So I'm going to write this one down for next week because Thursday or Friday is just not enough time, and plus my money's already tied up. So Kroger for next week. KR Kroger. All right. Next on the list, ASY. What the heck is ASY? Andrews Sky Group. No options, no thank you. I don't know who came up with this one. CVS. Nice move. Look at CVS's move. Doesn't that look nice? Uh-oh. General Information Hub. Do you ever use cash secured puts when looking at getting into a position or only covered calls after the fact? No, I do cash secured puts all the time. But I don't teach them here. Here I teach one strategy and only one. Ooh, let's look at General Motors. All right, we'll take a look at General Motors in a minute. CVS. Let's take a look at the numbers. Here's our top right here, just above 81. Okay, she big drop, goes sideways. What is that? 1, 2, 3, 4, 5, 6, 7. 7 months just channeling. See that? Just that tight little channel there. And she finally drops in December and shoots back up. All right, well, what does it look like now? Now, a year ago, 73.33. Tops out at the end of March of last year at 81. Our last 90 days, we had a 90-day high at 67.80, way up over here. And then she just drops. Here's our bottom down here, 43. And it's quite a bit of support down here. Wait till you see how many there. So as we zoom in closer, look at this. 1, 2, 3, 4, 5, 6. 6 times it tried to drop below 43, and it just wouldn't go any lower than 43.50. Okay, so that's, you could call that support. But look at where she is now. Okay, here's our 30-day bottom right there 30 days ago. Where's our 30-day top? Well, that was Friday. And what usually happens goes from 43 up to 53. That's a $10 increase on a $40 stock. Well, that's just a smidge below 25%. It's a 25% jump within, here, 2.5 weeks. I don't know about you, but I'd be taking that, jumping on out, taking my profit, saying thank you very much. See you the next time you make a move like this. That's a nice move. From 43 to 53. Yeah, it's a $10 move on a $40 stock. Okay, fine. Jinx, what's happening? Jinxie Cat. Interesting name, Jinxie Cat. So I like CVS. Believe it or not, I actually own some CVS. Okay, this is not putting me in a profit yet because I own it a little bit higher, but I am consistently bringing in money. Crap, missed you. Have you already gone over which stocks you consider on Tuesday? No, I did not. Think I missed your call, but texted you. Oh, maybe. 'Cause I always tell people, you want me to call, leave your number, I will give you a call. I can't help it if you don't answer the phone, but I did call. All right, that's CVS. I do own some. It's not a great time to jump in. I don't ever jump in when it's in a high like this. This is a time to sell. My opinion on time to buy. All right, next on the list, Dollar General. Okay, last year, Dollar General was at 135. Jumps up 168.52. That was in the middle of March. Okay, middle of March. Then she drops. Last week was the bottom of the year. Oh, that might be a good time to jump into Dollar General. Well, let's take a gander at it. Got a big drop right here. Look at that. She goes from 125 all the way down to 83 in 2 days. 125 to 83. That's a $45 drop. Ouch. Keeps on going down very slowly. Look at the last 30 days. Okay, here's your last 30 days. 30 days ago, we opened up at 75.58. Okay, goes sideways for a bit, hit a top right here at 78, and then drops, hits the bottom Thursday. Friday's one up day. So I like 2 days to the upside. So maybe, just maybe, it might be a good opportunity to jump into this thing on Tuesday or Wednesday. Okay, 68 is the moment. So, holy cow, could that be right? I don't know. Does that number look right to you? Because currently it's at 68.68. The closest strike price is going to be the 69. And the 69 is going for $1. Well, that's over 1.5%. Well, 1.5%, well, that's nice. That's over close to 80% for the year. If you get 1.5% every single week, of course. So let's see what a trade on Dollar General looks like. Let's get rid of this. Let's change this. Covered stock. Look at the 69. Here it is right here. Just one contract at the market to open. And here's what it sounds like. You ready? By one covered call, DG, Dollar General, weekly, okay? 24 January 25. That means this option expires next Friday. If it doesn't hit my target next Friday, well, I still own the shares and I still collect this money. Will your phone number show up as a Florida number when you call? Normally I don't answer those. Yep, Sweet Jones, exactly. If I'm calling you from Florida, it will show up as a Florida number. Yeah. It might say scam likely and have that 941 area code. But usually it has my name attached to it. Usually. All right. So 24 January 25, that's this coming Friday. That's 5 days away. That's it. So I'm going to collect $165 for this one contract. Okay? By one covered call, DG 100s, so weeklies, 24 January 25. That's this coming Friday. The $69 call strike against the DG stock at the market to open. That's the order. Okay, so if she gets filled, this is what it is. Now, when I say I want simple, safe, predictable, I know what I'm getting, what my profit's going to be before I even do it. The stock doesn't even have to move at all, and I know what my profit's going to be. That being said, the maximum profit's going to be 165. Well, let's get that calculator. Put in 165. And what's the trade costing me? $6,735.66. Okay. Divided by $6,735.66. Now, what does that come to? That comes to 2.4%. Okay, do you like Dollar General? Well, it's 2.44% for 1 week. That's all cash. Now, if it was a margin account, it'd be closer to 5%. If you want to take the risk of doing margin, which I don't suggest anyone does until you understand everything that comes along with it. Okay, Jinxie Cat, your best time calling me is basically anytime. I'm retired. I don't really do a whole lot of anything, except in the morning, I'm online with my morning trading group from 9 to about 11:30. Okay? After that, good to go. All right. So, if the stock is currently 68.44, okay, and I buy it, I sell somebody the rights to buy it from me at 69 because that's the closest strike price. I can pick up 165 is the maximum profit on one contract. Now, you can't do a contract unless you own 100 shares. You buy 100 shares of the stock, you sell one contract. You buy 200 shares, you can sell two contracts. 300 shares, three contracts. Same thing, over and over again. All right, so that being said, 2.4% for 1 week. But does it make sense? Buying a stock at the current price, 68.44. Well, that's the price right there. Let's get rid of it. Let's get rid of some of the stuff so you can see better. Get this down there. Get rid of this. Get rid of that. Go back to that. And go back to this. All right, so go over it again. Currently, stock was 75 30 days ago. Jumped up to 78, dropped down to here. Best time to buy is when a stock is low. Well, you can't get any lower than the low of the year. Is this the low of the year? I don't know. Let's check it out. I jumped around so quick I didn't really check. Yep, that is the low of the year. You can't get any lower than the low of the year, and that was Thursday. Friday was an up day. Is this the low of the year? Don't know. The best way to find out, time. Tuesday, we're going to have another little symbol here. Wednesday, there will be another one. Thursday, there will be another one. Is this the bottom? Well, we will find out this week. It is either the bottom or it's not. It's a yes-no question. And then the question comes down to, do you like this stock at this price? Is it something you're willing to buy and hold on to? And maybe, potentially, collect 1% or in this case, 2% every week. If I could collect 2% from Dollar General every week, I would never get rid of it. Why would I? Because 2% a week is over 100% per year, compounded out. All right? Now, I do it every Friday. I do this every week. So, I have been doing it it's like when you create a habit, that's like hypothetically speaking, you get up, you throw your jogging outfit on, you go out for a jog. Well, eventually, you get used to it and you do it every single day. The rain, the snow, the sleet, all that kind of stuff. Well, here, I get up in the morning, brush my teeth, go to the bath, and do all that kind of nice, neat stuff. I don't drink coffee, so I'll grab something to drink, usually some water or some orange juice or something like that. And then I'll do my trades. Because to me, at this point in my life, I've got to figure out where my money's coming from. I grew up in the 60s, 70s, and 80s. So I'm used to going to work at 8 o'clock in the morning, getting done and getting paid on Friday afternoon. So this fits into my schedule perfectly. Get up first thing in the morning, I do my trades. Here we go. Hey, Hollywood, what's happening? Jinxie Cat, is it better to do a call for the 25th or later? I usually try to do them the same day, but I want to try a swing. Jinxie Cat, you never know. Hollywood wants to take a look at Walgreens. Okay, chill out. We'll get to that one. Hold up. So that's Dollar General if you like Dollar General. Okay, you always ask yourself the question. Number one, does it make sense? Number two, do I like this company? Number three, do I like this company at this current price? Anthony wants to take a look at General Electric. Hold up, Anthony. We'll get to that. So, Key Bank is next. Key, K-E-Y. Let's take a look at that. K-E-Y. Can-Am, what's happening? Hello to you. Richard, how you doing? All right, so Key Bank is at 1830 at the moment. Well, let's take a look at the numbers. Here we go. The high, $20. The low, 13. A year ago, we're right at 13. Shoots up, goes sideways, shoots up, pulls back, goes up again. Okay, this looks kind of interesting. What's happening here? It looks interesting. What do the numbers look like? And that is right over here. What am I buying it for? $18.40. The closest one is going to be the $18.50. And it's going for 30. Well, that's over 2%. Wait a minute. No. 30 would be, 2% would be 37. So it's going from 30 to 33, just below 2%. Okay, so just below 2%. If you like KeyBank, well, let's take a look at numbers. Now, KeyBank is on my list. Okay, I don't know if it's on your list, but the question you should always ask yourself, do I like the company? Do I like the rate of return? All that nice key. Coach Joel, what's happening, Coach Joel? All right, so let's move forward. Jinxie wants to take a look at Merck. Now, we already looked at CVS, Jinxie. MRK. All right. So, that being said, we're looking at KeyBank. High, low, all this kind of nice, neat, fun stuff. It's giving us more than 1%. Fine. Let's take a closer look at the chart. Hollywood, it's a band. Yeah, they're not letting me go live on TikTok yet. So I'm going to find out what's going on there. Is what it is. All right. Key, here we go. A year ago, there's the bottom, 13. Hits it twice. See that? Once way back in January, and again twice in June. So that's the bottom. Hits it 3 times. Look at the big jump. All right. Last 90 days, last 3 months. I'm looking for 5 things. Remember? The high, the low, where was it? Where is it? What's the direction? Sideways, up, sideways, down, sideways, up. Okay. Same thing. Up, down, up. Same thing. All right. Let's keep on moving. I want to take a close look at the last 30 days. Now, the last 30 days, oh, glad you had multiple streams. How you doing there, Leo? Thanks for stopping by. Okay, so we're looking at KeyBank at the moment. So KeyBank, well, I'm not going to do this thing now. I mean, look at it. 30 days ago, you were around 17. So up, down, your 30-day bottom, 1650. Shoots up to 1840. That's where she's at now, the 30-day high. Your 30-day bottom was 4 days ago. Your 30-day high was Friday. Not the time for me to jump in. Sorry. So that's no to key. Now, I've never heard of FEX. First Trust Large Cap Core APA ADEX ETF. No. No. Don't get me wrong. It may be the greatest thing since sliced bread. But I don't do monthly options. The numbers just don't work. And I don't want to go... I don't really want to go through the explanation as why they don't work. They just don't work. All right. Next on the list. General Motors. I love General Motors. I do. All right. High of the year, 61. Bottom of the year, 34. Shoots up, goes sideways, up, and then down. What's going on here? Don't really know. We'll take a closer look. But before we do, the current price is 51.20. All right. The 51 is going for $1. You take 20 cents off of that, you're walking away with over 1.5%. Okay, Bulldog wants to take a look at D. What the heck is D? Is D Dominion? I think D is Dominion. The 51, 109, yeah, you're going to make your money. The 52, yep, you're going to make it again. So either one of these is going to give you 1%. The 51, safer trade. The 52, a little bit more rate of return. More money, more risk. Less money, less risk. So it's always up to you. What is it you want to do? How much risk do you want to take? Well, this one is not much risk to it. General Motors. Here we go. Let's take a close look at the chart. The bottom of the year was a year ago, 34.28. Last 90 days, last 3 months. Okay. Low, high, where was it? Where is it? What's the direction? Up, down, up, down, up, down, up. down. So it's basically coming back down again. Now I'm going to take a closer look at this just to make sure. Right? So that's the 90-day chart. The 30-day chart gives me a better idea of what I can expect by this coming Friday. So the 19th right there. That's pretty plain to see, isn't it? See, once you get it down to the last 30 days, well, the last 30 days is only like 20 trading days. Okay? Up, down, up, down, up, down. Sorry, if you like General Motors, you might need to wait another week because it's going to take a little while for it to drop a little bit more to make it worthwhile for whoever taking these profits. Because it goes from 49 to 53, which is $4. Right about $4 on a $49 stock. It's just a little bit less than 10%. Oh, wow, that's an interesting name. Shouldn't we be guided by emotions of liking and disliking only by the numbers? Or whether a given company is making more and more profits and developing? Yeah, that's an excellent question. It really is. So, you're new. I can tell. Not only because of the question you ask, but by your name. Now, I'm pretty good with names. I do have 6 different channels, but still, I'm pretty good with names. All right? A name like that, yeah, I remember that one. So here's the thing. The only stocks I'm looking at specifically, 20 years or more of increased profits, which means consistently increasing their dividends. Now, the dividend is a portion of the profits given back to the investors. Those are the only stocks I really like. Now, every once in a while, I will do something that breaks that. Okay, like, for instance, Apple is not on my list. Apple does not have 20 years of increased dividend payments, but Apple is on Warren Buffett's list. Okay? There are a few other companies that are on Warren Buffett's stock list that aren't on my stock list. So in that case, yeah, I will trade those. But for the most part, I want companies that have consistently increased their profits, okay, and have weekly options. Let's get back to General Motors. General Motors is on my list because it's over 100 years old. Okay, Hollywood, I saw you the first time you asked me about it, and that's actually next. So chill out. You know I get to every single question, so I will get to it. As I was saying, the reason why General Motors and Ford are both on my list, okay, they both are over 100 years old. Amazon, Brandon, Amazon has no dividends whatsoever. It's very hard to predict their movements. Now, a dividend allows me to predict movements easier because stocks have a tendency to increase in price as they get closer to the EX dividend date. You don't get that with companies that don't have dividends. So how do you know when Amazon's going to move? Okay, I like predictability. Brandon, thank you for that. So that being said, yeah, Ford, General Motors are on my list because they are both over 100 years old. Okay, they're both icons. They both consistently increase their dividend payments to the shareholders, and they're both I think lower than their current book value. So the book value is what is the company worth if you liquidate everything. When I say liquidate everything, I'm talking pens, pencils, mops, brooms. Sweet Jones wants to look at Kinder Morgan and Dow. All right, we'll take a look at those. Sit tight. All right, so General Motors, I normally would buy it because looks good. But look at where we are at the moment. Up, down, up, down. She's coming down at the moment. Not something I want to jump into now. But next week, after she finds the bottom down here, because as she comes down, she'll find a new bottom and then turn around and go back up. So I'm writing General Motors down for next week. So it's a no for this week, but maybe next week. Okay. Next on the list, Walgreens WBA. No. That was quick, wasn't it? No. And here's the reason why. If you can't tell, that's a time to sell, not a time to buy. Okay, I can't help you out. Seriously, think about it. Okay, 30 days ago, we're at $9. Now she's at 13. Okay, you may say that's not a lot. Think about it. From $9 to 13, okay, that's a $4 move. That's almost 50%. If you're going to get 50% in a week, yeah, that's profit taking. Happy birthday. Thanks for showing up. Yep. What happened to Macy's? Now, Joe, we already looked at Macy's. Okay? We already looked at Macy's. Now, after the recording, go back and watch it over again to get a better idea what's going on. That being said, let's keep on moving. So, that's Walgreens. Next, General Electric. Who wanted to take a look at General Electric? That's one of those companies that they're so old and it's so established that the premiums are probably horrible. Well, let's look. 182.87. So we'll look at the 183s. There are no 183s. Holy cow, can that be right? General Electric. 182.85. The next one up is going to be the 185. Okay. Well, the 185 is going for 450. Well, that's over 2%. The 182.50 is going for 575. That's over 2%, and that's a safer trade. I would do the 182.50s because we're at 182.87. Brandon wants to go Chevron, CVX. I'm going to write General Electric. And okay, let's keep on moving. All right. A year ago, check it out. The bottom of the year is 101. A year ago. Shoots up, goes to 190. Was that 192, 193? 194.80. So it goes from 100 all the way up to 194. That's almost a 100% increase. Satisfy Short. How are you today? So it's almost 100% increase from last year, beginning of last year until mid-October. Well, then she pulls back a little bit and she shoots back up again. We're currently at 182. Let's zoom in a little bit tighter there. Last 30 days. Yeah, it's definitely going to be a no because look at where it is. 30 days ago was the 30-day bottom. Shoots up. Currently at a 30-day high. Friday. Yeah, not a time for buying. All right, that's General Electric. Merck, MRK. Well, Merck looks a little interesting. Look at the last couple of weeks. Okay. Last couple of weeks. She drops, shoots back up. Thank you, Anthony. She drops, shoots back up. Here's the high right here. Here's your 30-day bottom. We're there, 30-day bottom, 30-day top. Now she's down here. Yeah, you're looking for a new bottom. Bottom fishing. Okay? Looking for a new bottom here. Not a time for jumping in. James, thank you. One person figures it out and everybody says it. All right. It is what it is. All right. Now, as much as I do like General Electric, and I like General Electric. Just, I'm not buying it as it's dropping. I'll wait for it to find the bottom before I jump in. But not tomorrow. Tuesday. There's no trading tomorrow. I don't even know why we're doing this tonight because there's no trading tomorrow. That's okay. We only got a half hour left to go anyway. Next. D. Now I'm curious. Is D Dominion? Am I right? Dominion. Damn it, I am right. Holy shit. No. Oh, come on. Dominion's at $55, but it's a monthly optionable stock. Now, I say I don't do monthlies because the numbers just don't work. I'll give you for instance, okay? Okay, so D's here. She's in an upward trend. Wonderful. So, if I was to do the 55s, okay, I would be collecting 140 for 4 weeks. Well, that's almost 3%. Almost. Because 155 times 3 would be 165. So $1.65 is 3% of 55.80. But if I'm going to be holding it for 4 weeks, hold on. 5, you got to be kidding me. 5 weeks? Yeah, no. Because we got 33 days. You see it? 33 days. 7 goes into 33 how many times? Well, 4 and change. Well, 4 times 7 is 28. Okay? But we have to wait 33 days. So that's 5 weeks. And I'm only picking up not even 3% for 5 weeks. No. And then you got to figure out, here's 30 days right here. Okay, look. Shoots up, pulls back, up, pulls back, up. Well, great. Now tell me where is it going to be in 5 weeks? Because that's where the next strike price is going to be. That's where the option is going to expire in 5 weeks. So 5 times 5, that's 25 days. You got to figure out where is it going to be. It's hard enough to figure out where it's going to be in 5 days. You want me to figure out where it's going to be in 30 days? Yeah, no, sorry. I don't like monthlies. The numbers don't work. It's only 3%, less than 3%. And it's 5 weeks, so it's less than 1% per week. So why would I bother with monthlies when I don't know how many times I say it, the numbers just don't work with monthlies. It just doesn't work. Okay, tilt it just a little bit right there. Good. Got the whole screen in now. All right, so no to General Electric. Dominion. Dow is next. Now, I know Dow, D-O-W, does have weeklies. D-O-W. All righty. Ooh, take a look at that, especially right here. Okay, here's your high. Remember, I'm looking for 5 things. Okay, the high, the low, where was it, where is it, and what's the direction? Up, down, sideways, down, and then up. We're currently at 41.15. The 41's going from 47 to 55. You just might be able to squeeze your 1% out of there. You might. Okay? It's going from 47 to 55. And we're only looking for 41, but we're losing 15 cents right on the top. So you take 15 cents off of this 47, you're walking away with 31. Nah, it's not quite there. Which do you write down for 185.50 safer? I have no idea what we're talking about. Now, when you ask me a question, you got to remember, I got 6 different channels going, which means I have 6 different conversations. Okay, so I don't know exactly 182.50. I have no exactly idea which one you were talking about. So you actually got to remind me as you're asking the question. Because it doesn't save the question from before. It's like you don't put in a question and every single question you pops up. No, it's just that one. I have no idea what you're talking about. So anyway, it's going to be a no for Dow because the numbers just don't work. Next on the list, Kinder Morgan, KMI. No, it's at the high of the year. It's like, when's the last time you ever heard anybody say, oh, look at Kinder Morgan, it's at the high of the year. Let's buy some and wait for it to go higher, someplace it's never been before. Yeah, no. On your upper paper, you wrote the stock down at 182.50. No, what I wrote down was General Electric. I wrote down General Electric. I didn't write down the number for it. What was General Electric? 182.50. Okay. I like General Electric at 182.50. Yeah. Yeah. Now, it's not a stock tip. It wasn't advice. It was just looking at the numbers and what the numbers told me. And I do recall saying that I wouldn't do General Electric. Okay? I also remember saying I personally wouldn't do General Electric because your 30-day bottom is here and your 30-day top is here. Okay? Usually, when you go from 162 to 182, that's a $20 increase. On a $162 stock, $20 is 13%, something like that. So 13% in 30 days, I don't know. People take profits. I sure wouldn't jump in, but that's me. You got to figure out what works for you. I'm just saying. Okay? It's not advice. It's not a tip. It's just me reading the numbers and me giving my opinion. I don't give advice, okay? Never, ever, ever listen to advice from some random guy on YouTube, okay? So, that being said, I'll just go through the numbers, and if it makes sense to you, do your research. Ask yourself the question. Well, we all know General Electric's been around for over 100 years. We all know that. Okay, you bring up any trading platform, it will tell you exactly what the current price is. If you're approved for options, well, you take a look at the option chain. Well, if the current price is here, 182.87, and I buy it tomorrow morning, or Tuesday morning, 182.87, what can I sell a covered call for at the money? Okay, well, it's $5.75 per share. So for 100 shares, that's $575 profit if the stock stays above 182.50. Right now it's at 182.85. So go, take it for what it is. All right, next on the list, Chevron CVX. No. Oh my goodness, that was quick, wasn't it? What do you think? Do you think it can continue going up? Well, yeah, it can. But again, why would you say, hey, it's at an all-time high. Let's jump on it and let's take it higher. Yeah, no. If it's moving up, hey, it might continue moving up. You just don't know. That's not a risk I want to take. Okay? See, I look at this and I think to myself, well, if I bought it down here, I would take the profits. Sherry Morgan, that'd be mob mentality if you buy it. Everybody is buying it, so I should too. Kind of thinking, yeah. Sorry, Sherry, I don't run with the crowd. I don't, because to me it makes no sense. It was at 142, about a month ago. Now it's at 162. Okay, 142 to 162. That's a $20 increase. That's a nice profit. I would be taking profit. I wouldn't be jumping in for a new position. I'd be taking profits. But that's me. Everybody is different, and you guys got to figure out what works best for you. For me, I want simple, safe, predictable, and consistent. That's what I want. And this, to me, is not a safe trade. But that's just my opinion. Okay? Some of you guys might take a look at that and say, Chevron at 161? Hell yeah. And some of you are probably saying, Chevron, 161? Oh, hell no. Everybody's different. There is no right, there is no wrong. It just all depends on how are you viewing it. You know what I mean? So, me personally, I wouldn't do it. I like Chevron. Happy birthday, James. Hello from Jennifer. Hello from Jennifer. Hello, Jennifer. It's kind of weird because I know a lot of Jennifers. My goddaughter, my niece, Jennifer. Old. Yeah, I know. Quite. Anyway, let's move on. So Chevron's going to be a no. Clorox. Well, CLX. Now, this company's over 100 years old. Sherry from TikTok. Hi, Sherry. Don't. Yeah, but why would you say hello from Jennifer? Who's Jennifer? All right, Clorox. Let's take a look at Clorox. The high of the year, like 172. The low of the year, 125. Last year, right around 143. Shoots up, pulls back, back up, back down, back up. Look at right here. That looks like a good time to jump in, depending what everything else looks like. All right, so that's the 1 year chart. Now, let's take a gander at the numbers. What am I buying? 163. See, I hate it when they do that, because the bid and the ask are usually only 2 or 3 pennies off of the last trade. Well, the last trade was 160. So hypothetically speaking, the current price should be around 160, not 163. The 160 is going for 140 to 180. Yeah, you can get the 1% there. But the 163 to 165, no. Yeah, no, look at that. If you're wrong, 0, 0, 0, 0, 0, 0. Yeah, that don't look good at all. Look at what are these numbers? 20, 31. Wow. Those are some weird numbers. Anyway, when the market opens, this is something important to remember. When the market opens, these numbers here, constantly changing. So the math doesn't change and the equation doesn't change. What am I buying it for? Anytime you buy a stock, you buy at the ask price. Anytime you sell something, it's at the bid price. So the ask price is here. You divide it by, you find out which is closest strike price. So if I'm buying it here, what is the closest strike price over here? That's what I can sell it for. And then the premium is what am I collecting. Now, is what I'm collecting more than 1% of what I'm paying? Okay, so the simplest way is just move the decimal point up. So 163, $163, 1% is 163. 163, 1% is 163. You're just moving the decimal point over. Anyway, that's the simplest way of doing it. So Clorox, the numbers look kind of weird, but let's take a look at the chart. Last 90 days, look, she goes up, down, then up again. Up, down, then up again. Looks good. Last 30 days, right there. Well, now that's a total different picture now, isn't it? Look at it. Here's your high, 165. She drops, 156. Now she's going back up again. 1, 2, 3, 4. 4 days to the upside. Well, look at all the space between where it is now and where the high is, way up here. That is a lot of space. That is an invitation to jump on in. Well, it's also an invitation to ask yourself a whole slew of new questions. Number one, does this one make sense? Do I like Clorox at this current price? Am I willing to hold on to Clorox? Keep in mind, this company's over 100 years old. It's a household name, and it's consistently increased its dividends, its profits, for more than 5 decades. Not 5 weeks, not 5 months, not 5 years, 5 decades. That's 50 years. So yeah, it's on my list. Of course it is. But is it the right time? Well, this is telling me it is, because the 30-day bottom was Monday. Tuesday, Wednesday, Thursday, Friday, 4 days to the upside. Well, what's going to happen now? Normally, okay, stocks go up, stocks go down, stocks go up, and it will continue to go up until somebody, and it only takes one person, whoa, I got enough money, let me take my profits and jump out. And once he does, the next person does, and the stock slowly comes down. But here's the point. Profit taking, boom, right there. Now it's going back up again. Simple. I don't like to complicate things. I want to keep it simple. I want to keep it safe. I want my profits to be predictable and consistent. So I stick to a certain strategy, and I only do stocks that I know of. I think Clorox has a dividend soon. Well, Anthony, yes, it does. Okay, stocks have a tendency to go up just before the dividend date. Perfect time to jump in. You got the dividend coming up. You got a 30-day top, 30-day bottom. Now she's going to the upside. Does it make sense? Now, I know adults have a tendency to ask a lot more questions than is necessary. It's a simple question. Where's the high? Right there. Where's the low? Right there. Logically, where does it look like it's going? Well, if the high was there, come down here. Where's it going next? Up. Hollywood. We already looked at Walgreens. Oh, wait a second. Yeah, we already looked at Walgreens, and it was a no. Okay? Okay, Hollywood. See this right here? Here's your bottom right down there. And it's just jumped up. Jumped up out of our trading range. The trading range was here. We've been trading this thing for a long time. Now it's out of our trading range. When it goes out of your trading range, it's like, okay, I'll wait for you to come back down. Okay? Here was our trading range right here. And it stayed there week after week after week after week. Now, she jumped up, out of range, not worth it anymore. I don't like that type of risk. Now, it'd be great because I did buy it at 920. Now it's at 1252. Well, time to say bye. Simple. All right. Next. Wells Fargo. Wells Fargo. WFC. Uh-oh. Megacorp or KK. Don't we have a huge speculative bubble in stocks right now, and we're just waiting for it to burst? There's a lot of different ways of interpreting that. Okay, so let's go back for a second. All right, so here's my question for you. When you say, are we in a bubble, aren't we waiting for it to burst? Well, Walgreens was at 24, now it's at 12. That's a 50% decrease. How much more decrease can you get? It was down from 24 down to 850. Okay, that's the bottom of the year right there. Could it go lower? I don't really think so. Because from 24 to 8 is a 75% decrease in price. Okay, what other stocks have done this? Look at Macy's. Macy's was at 22, and it dropped all the way down to 13. Again, huge drop. You can take a look at a lot of companies. Now, a lot of companies have lost between, 10 to 80, 70, 10 to 70, 10 to 80% from a year ago. So are we in a bubble, or some companies in a bubble and some companies not? Because they're all different. Okay, can it go lower? Yeah, it can. Is it going to? We don't know. Okay, Macy's, $13.99 is the current price of the stock. The book value for Macy's is a hell of a lot higher than that. Let's take a gander at it. Okay, so here's Macy's right behind me. Looking at statistics. Okay, the book value right here. Book value per share on Macy's, $15.09. So you're buying the stocks at $13, but the book value is $15. You're buying it for less than it's worth. The book value. Because see, if someone comes in, if a Supreme Court comes in and say, yep, cease and desist, liquidate everything you got, pay off your investors. Well, that stock you just bought for $13, well, you're going to get 15. Because that is the book value if they liquidate everything they own. That's where they come up with that number. Okay, hopefully that worked. Next on the list AGNC. AGNC. Okay, so AGNC, I don't really like it, only because look at these numbers over here. 961. The 10 is going for 0 over 1 penny. Yeah, no. But look at one strikeout, 0, 0, 0, 0, 0. Every once in a while, you will find a stock that has absolutely horrible premiums once you're one strike out of the money. Those I don't like. Okay, this is one, AGNC and Energy Transfer, ET, same thing. When you're one strike out of the money, you get nothing. Now, if the stock drops, take a look at Dell for a second. Look at the premiums. Okay, 155, 108, 75, 46, 44, 30. You're 7 strikes out of the money and you're still collecting 30 cents a share. That's Dell. Intel's the same thing, INTC. Okay, 33, 25, 17, 13, 10, 8. 7 strikes out of the money and you're still getting a halfway decent premium. So yeah, I lean more towards those companies because they have better rates of return, better profitability. Okay, the numbers have to work. Remember rule number 5? 5 rules. Never buy something you don't understand. Never sell at a loss. 20 years or more of increased profits. Weekly options. And number 5, always, always, always make sure the numbers work. If the numbers don't work, don't do it. It doesn't make sense. It's not worth it. Don't risk your money. Let's keep on moving along. Okay, that being said, Can-Am's up in Canada being cold. Brad, hey James, Kohl's is up now. All right, well, let's take a look at Kohl's. Nice. Now, I do have some Kohl's, just to let you know. Back to your question. Aren't we in a slump? Well, yeah, we are. Look at all these companies. Okay, the high, close to 30. Now we're down to 13. I don't know. What do you think? From 30 to 13? That's almost a 60% drop. Almost. So, let's take a gander. Now, I do have some Kohl's, just to let you know. Currently, we're at $13. So, if I buy it at $13 on Tuesday, I can sell the call option for someone to buy it from me and pick up anywhere between 25 to 28. Well, I could get 2% there. Well, that works for me. I love 2% on a weekly basis. 2% on a weekly basis is over 50% per year. Okay? Wait a minute. No. Sorry. 1% per week is over 50% per year. 2% per week is over 100% per year. Let's take a gander. A year ago, we're at 24.52. We shoot on up to about 30. And then we drop all the way down to here, to the bottom of the year, last week. Well, you can't buy any lower than the low of the year. And that was last week. And where do you make your most money in the stock market? Buying low, selling high. Well, let's take a look at a covered call on Kohl's. Okay, a covered call on Kohl's. All right, here we go. The high of the year, 29.60. That's close to 30. Last 90 days. Okay, high and low. Where was it? Where is it? Look at the motion. Down, up, down, up. Ooh, this is like a perfect invitation. I'm jumping into Kohl's come Tuesday. Just letting you know. Yep, that's a yep for me. All right, now let's take a gander. Last 90 days. High, low, where was it? Where is it? Look at it. Look at the movement. Still, everything looks good. Last 30 days. What does the last 30 days show me? Because the last 30 days will give me an idea of where it's going next. Okay? 30 days ago, we opened up at 1404. Okay? A couple of days later, there's the top, 1496. And the bottom, Wednesday. Check that out. 1496 almost hits 15. Drops down to 12 way down here. Okay? Thursday was higher. Friday is higher. If this thing opens up at 13 or above come Tuesday morning, yeah, I'm jumping in. Because this is ideal or iconic. You know, come here, drops down, shoots back up. Well, yeah, that's the bottom of the year, right there. You can't get any lower than the bottom of the year, and it was 2 days ago on Kohl's. Just for the fun of it, let's see what the book value on Kohl's is. KSS Kohl's. Oh, you got to be kidding me. $35 a share on Kohl's, and it's only going for, how much was it going for again? What was that? $13? Holy shit, that's like 1/3 of the current price. Because right now the current price is $13. And if the book value is 35, well, yeah, almost. Okay, anyway. So yeah, Kohl's is on my list for next week. Yes, it is. All right, anyway. Next on the list. Can-Am wants to look at GPC. Well, Can-Am, unfortunately, GPC, Genuine Parts Corporation, they're monthly optionable stock. They're not on the list, even though they have close to 7 decades of increased profits. That's a lot if you think about it. That's longer than I've been alive. They've been increasing their profits year after year after year. Well, yeah, it would be on my list if they had weekly options, but they don't. They're monthly. The numbers just don't work. Sorry. Okay, so you guys seem to be out of questions, and we have 8 minutes left. Let's take a look at Morgan Stanley, MS. Nope. That was quick, wasn't it? Look, it's at the high of the year. Yeah, no thanks. Let's buy it at the high. Wait for it to go higher. It's never been there before. Well, let's buy it anyway. Yeah, no thank you. Can you explain the bid, ask, and profit checking? I have no idea what you mean by profit checking, Brandon. Okay, the ask, bid, and profit checking. I have no idea what that means. I know what profit taking means. I have no idea what profit checking means. Hollywood wants to take a look at Vail, V-A-L. Why would you want to take a look at that, Hollywood? Interesting. Now, didn't we check out Vail once before and figure out that it was a no? V-A-L-E. Let's take a look at the details on Vail. Does it make sense? Does it make sense? $8.94. Holy shit. The book value is $48. Profit taking, yes, sorry. You could calculate how much you could potentially make. No. Totally different story, dude. Okay? When I say profit taking, there's a huge difference between maximum profit and profit take. Oh, hold on. This needs a little bit more information. So Vail, yeah, it has a nice book value to it. Great. But do they pay dividends? And do they increase their dividends? I don't know. Well, let's wait. Come on. Here it is. Historical prices. Dividends only. Maximum amount. Oh, I could say no right now, dude. Check this out. I'm not even going all the way backwards, Hollywood. Hollywood! You should know better, dude. Look at these profits. 2022, 6 cents. 23, 35. 41. 47. 55. Nice! 2024, 37. Now it's down to 9 cents a share. That's not continuously increasing their profits. That's decreasing their profits. That is a no, no, hell, double hell no. Sorry, dude. All right. Brandon, you showed how to move the decimal point to find out what your potential profits could be. No, you're mistaking something. Hold on a second. Let's find a good one to do, because I'm not doing Vail. Back to Macy's again, all right? We're going to do Macy's again. You ready for this? Now, when I say what 1% is, Vivo, how are you today? When I say figuring out what 1% is, okay, well, I'm looking for a simple, safe, predictable, consistent 1% per week. How do you figure out what 1% is? Well, figuring out what 1% is, you take what the current stock price is. Well, the current stock price is $14.01. $14.01. 14.01. Well, what's 1% of $14.01? Well, you move the decimal point over two places. 1% of $14 is 14 cents. Okay? Simple. You multiply 14 cents by 100, you get $14. That's 1%. Now, when it comes to profit taking, all right, see the chart right here beside me? Back in September, this stock right here was at 14 bucks. Okay, it went up, it went down, it went up, it went down, it went up, it went down, it went up, got all the way up here to 18 bucks. Profit taking is when you buy down here and it jumps up to here and you say, that is enough for me. I want my profits. I'm going to sell. And when you sell at a high and take your profits, the stock normally comes down. Some people call it a retracement. Some people call it a setback. Some people call it diving. There's a lot of different words for it. But, you know, it goes up, it goes down, it goes up, it goes down. That's one way of looking at it. Or I like to look at it as accumulation, profit taking. Because people start buying, and once it gets up to here, like, whoa, I think it's going to come down because of people taking profits. People take profits and the stock drops. Visuals, S-visuals, what's happening? All see, what was that? All seeing iris visual. Okay, interesting. So that's that. Steve, can you go across all symbols and numbers on the Thinkorswim platform and how much they relate to your decisions, or should they just be ignored? All right, Steve, I'm not 100% sure exactly what you mean by that. Let me see if I can read it again. Can you go across all the symbols? That's going to be a definite no. Okay, there's 9,835 companies. No. What do I think about Occidental Petroleum? Ooh, well, let's take a look at OXY. OXY. Interesting. Okay, here's the high of the year, 71. Here's the bottom, 45. And look at the movement. Brandon, before taking a break. Brandon, what's that question again? Hold on. Bum. All right, Brandon, profit taking, yeah, okay. You showed, okay, Joe, what do I think? OXY, okay. I was told to always look for deltas to be above 40. Oh, okay. Yeah. Okay, so you're talking something totally different. All right, so let me see if I can explain to you what the delta is. Now, when people say the delta, what do they mean? Well, it can be complicated. Now, remember when I told you I created this strategy for my 9-year-old daughter? 9 years old. When she was 9, she said, "Daddy, can you teach me what you're doing?" I said, "Sure." Here's the challenge. When you're trying to teach a 9-year-old how to safely invest in the stock market, it had to be simple, safe, predictable, consistent, and no way for her to lose. So if I was going to get into the deltas, well, then she's going to ask me, is that all? I said, well, no, there's the Vegas, there's the Rho, there's the Theta, and there's the Black-Scholes pricing method for standardized options. It gets a little complicated. What you potentially make, wait a minute, what you'll potentially make on the dollar. Yeah, I know what the delta is. Really, seriously, I do. Hold on a second. Blessings and greetings from India. Namaste. So, let's get back to the delta, all right? Now, the delta can be confusing to a 9-year-old. Now, I understand what you're saying. You're an adult. Adults have a tendency to make things complicated. So here's the question for you. If you have a high of the year, and the stock drops more than 50%, and then she starts bouncing right here, it starts going back up again, does that look like it's a good place to jump into buy as it's hitting the bottom and going back up? Well, the answer is yes, okay. But there's a lot more factors that come into play. Well, let's take a look. A year ago, we're at 56. Right? It jumped up to 71. Okay, nice move. But then from there, from the 71, she drops like a rock all the way down to 45. Now that was last month. Well, looks what happened since then. Okay, back in October we're at 51. She drops, retraces, drops again right there on the 19th. Exactly 1 month ago today. So 1 month ago today, it's at its rock bottom for the year. Great time to buy at the rock bottom. But look, from here up to there, that's a 30-day high. Now there's going to be profit taking. 1, 2, 3, 4. 4 days coming down. Well, it's going to continue to come down until it's done. So, that being said, I forgot what my topic was of the conversation. Damn, this getting old shit sucks. It really does. What was I just talking about? Now, he's asking me something about... I have to go back to the questions. Oh, yeah, it was talking about the delta. Okay. So, when I say make it simple, safe, and predictable for a 9-year-old, yeah, thank you. What are we looking at? Don't. That's contracts. I don't want to look at that. I want to look at the delta. All right, there. All right. Okay, Jose, we already gave my opinion on OXY. Oh, wait a minute. We're on OXY right now. Yeah, it's going to be a no for this week. Because look, 30 days ago was the 30-day bottom. That's when you should have jumped in, 30 days ago. Okay, here, 30-day high was 4 days ago. Okay, last Monday. Now it's going to come down. So, yeah, not for another 4 or 5 weeks. Sorry. Uh-oh, it's almost time for a new pad of paper. Anyway, yeah, that's OXY. So the delta, let's get back to the delta. Are you ready? So currently, okay, Nelson says sell puts on delta. No, you don't want to sell puts on delta. You want to buy puts on delta. Buy puts. See, if you sell puts, okay, somebody can force you into buying it here. Because selling puts down here, you're not going to get anything. You can buy puts down here. or you can buy puts right here. So as the stock drops, the value of your put option will increase. See, it gets confusing, so I don't want to talk about that. I want to just stick to covered calls. So as I was saying about the delta, you ready? The delta, here's what it means. Briefly explain it, okay? If I buy this stock right here, right now at $52, it's right there, okay? Now, the delta on the 52 strike price currently is 50 cents. So every dollar the stock goes up, the value of the option will go up 50 cents. Hogan, how do you typically screen stocks to determine your Monday morning purchase, as there are thousands of companies? Hogan, here you go. You ready? Here's some statistics for you. Currently, at this moment in time, there are 9,835 companies to choose from. At this moment. Okay? It changes every week, the numbers. But at this moment, 9,835 companies to choose from. How do I decide which ones I like? Consistent profitability. Weekly options. That's it. Have they increased the dividends to their shareholders for more than 2 decades? Out of 9,800 different companies, there's about 300 that fit. Weekly options and 20 years of consistent profitability. We are past 11:30. I've answered every single question. One more. Steve, can you go across the symbols? Okay, no. Now, the reason I can't go across all the symbols, Mr. Steve, because there's 9,835 symbols that you can choose from. So my list consists of the Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, and of course Warren Buffett's list. It is 11:36. Yeah, tonight was a pain in the butt. We didn't have anything on TikTok because, well, we got to figure out what the powers that be can say what we can and cannot do. Now, we still have TikTok, but we're kind of limited on what we can do. So, how are we going to do this? Well, we still have YouTube. We still have Facebook. We still have Instagram. We still have Rumble. We still have Twitter. We still have Truth Social. And we do still have LinkedIn. Now, most of those I still haven't got approved for live feeds yet. So we'll see how it works out. That being said, you guys have a great night, and we will see you again tomorrow night. All right. Have a nice day, everyone. All right, Mr. Michael, have a good day. Done over here. Done right there. Done over here. And right there. And down here. Stop.